It's time to down tools for a bit. Welcome to the ToolShed, the influential podcast for anyone and everyone involved in the building industry. Here's your host, Mick Hawes.
Hey there, before we kick off, I want to share a really important thought. 71% of you who watch this channel frequently don't subscribe. So if you've enjoyed any video you've ever watched, can you do me a favor and hit the subscribe button? It helps the channel more than you think, and the bigger the channel gets, the bigger the guests get. So let's go. So that's what my voice sounded like a couple of weeks ago.
Yeah.
This is what my voice sounds like now. I didn't have any voice at all last week, so we're just slowly getting back into it. In this week's episode, I'm speaking to a very, very good friend of mine. His name's Terry Tran. Not going to tell you too much about him now. We'll do that when we start to speak. But this will be a podcast that you were very, very glad that you listened to. I can guarantee you of that. Before we get started, just wanted to remind you that if you haven't done the Builder Readiness, Freedom Readiness scorecard, there's a link in the description. Go take that. It'll take you about 2 minutes. It will deliver to you a score of how well you're doing in a number of areas of your business, but it'll also give you some suggestions as to what you might need to work on. And the reason that we put that together is that we've found for years. So I've been doing this business coaching paper for 35 years or something. And the reason that most people go into business, when you ask them, if they can remember, if it wasn't that long ago, they will say that, well, you know, I would get more financial freedom. Well, not, they wouldn't say freedom, but I could earn more money. I would have more time freedom because I could choose when I started and all of that sort of stuff. I could choose when I had holidays, and I could also choose who I worked with. So it's all about sort of freedom of time, freedom of money, freedom of choice. But when you really start to get into it with most business owners, particularly builders, is that the case? Answer, no, not very often. They're like unicorns, businesses that actually do give their owners any sort of freedom in those spaces. So you need to be ready for it. It's not just about systems and growing and scaling and all that sort of stuff. There's a whole bunch to it. And if you take this little 2-minute quiz, you'll get some really great insights and give you some ideas of where you might get to need to start to get ready for your freedom, you know. So it's a good thing to do. Anyway, there's Terry Tran. I'm sure he's in Sydney, just looking at the backdrop there, but he'll tell us. Are you in Sydney?
Yes, I am, Mick.
He is in Sydney. Terry's been on the podcast before. Terry is a great friend of mine. Terry is, just let me pump your tires up for a bit here, Terry. Terry is an absolute legend in the space of investing in the share market, the stock market, with an incredible system that I was so pleased to find out has a tremendous focus on preserving the capital, you know, preserving the money. It's quite risk adverse, but performs as well, which is kind of, most people think, you know, lots of reward means lots of risk, and it just doesn't have to. You just need to know shit. You know, you need to know stuff. So that's Terry, and he's a great friend of mine. It's an absolute privilege to call him a mate. He is not only great at what he does, he's just a good fella. And his wife Edlyn, we've holidayed together and all of that, and they're terrific people. And it's great to have you on the podcast. And for the people who haven't heard you before or spoken to you before, give us the quick version of how you got into shares and the system that you've put together nowadays.
Sure. Firstly, Mick, I want to say also, likewise, a privilege to be on your channel and also share what I know, you know, with your tribe as well. And I just love, and you can tell by my passion over time, that I actually love doing this as well. So, so it's how I got into it, Mick, is I think out of necessity, because uh, I've never been, in the trades sector, building, etc. But however, worked straight out of uni, went to corporate, and pretty much worked my butt off. And that thing that you mentioned about seeking financial freedom. So although I was making very good money over time, though, I was losing a lot of time. So I was doing sort of 60, 70, 80-hour work weeks and then getting burnt out, and then found myself in the hospital, multiple times, and then realized that ultimately in the end, the major bank that employed me didn't really care. They just wanted me to hit targets, and I had to find another way, which was investments. And a lot along, off what I went in terms of this investment game. But then what I did find was a lot of BS that's out there. I did believe in a lot of it, and ultimately over an 18-month period, lose quite a fair bit of money, basically 3 years of salary, believing in all that hype about getting rich quick, which again did not happen. And then went back to the drawing board, reached out to I guess I'd say a mentor of mine now over the years, Warren Buffett. Then surprisingly, he wrote back to me, wished me luck. And this was 25 plus years ago. And I went on this journey. Basically, what you mentioned earlier about all about not just making money. That's one thing, but I think if you focus on preserving the capital and making sure that you don't lose as the number one priority, then the making money part comes as a byproduct, and that's almost automatic that it actually does come along. So that's how I got into the game. Ended up managing people's money as well over a number of years, over 15 years, in fact, running a hedge fund, and now over the past decade. Now helping, we've educated over 2,000 people, and a lot of them are also builders and tradies as well. So it's been an honor to be, in this game, but also seeing the changes that we've been able to help make for a lot of individuals and their families too. So
Yeah.
that's how I got.
And you speak to people in your program, and they're just full of praise and excitement and inspiration too. So before I press the go button on this here podcast, you said, I've got something new. Got something new, and it's probably really going to be great for builders and tradespeople. So I think you better tell us what it is.
It's basically a 25-page guide that we put together, and it's really focused on because I've talked to a lot of tradies over the years, and just seeing the challenge that you guys have, but also knowing the basics that I can share with you of what you need to do to physically just get started ultimately. Then, because in the end, this investment game, it's all about preserving capital, but in the end, it's all about also getting started. Even no matter how small, it does not matter. It's just getting started and getting that first foot in through the door, and that guide will be that first step. Not only sharing with you with the challenges that I know that you face, but also how do you actually take that very first step, and what is that you actually need to do to take that very first step. So that's what that guide will actually do.
So in your mind, what's the benefit, if you like, for builders or trades based business, or is it really focused just on small business owners? What's the focus for this particular guide and resource?
Yeah, I think it's both. So we do know that there are also tradies that do not run their own show; that they are employed, and so it helps them as well. But however, the main crux of it is for the small business owner, builder that does run their own thing, even tradies that are self-employed and run their own show. And what it's really about is just sharing the common, I would say, no nonsense steps to taking that very first step. And how do you actually physically invest in the share market, but also how do you also, not just the share market itself, but also, how do you actually manage money? Because I know, for example, Mick, we've spoken about this, that profit first principle as well.
Yeah.
And it's all about not only, yes, you can make good money, but what I do find is a lot of people in the trades area, they in times when they do make good money, they don't know what to do with it, and then they take the money and they end up blowing it, buying toys and things like that. And then when times do get tough, they don't have the savings or the profits that they've set aside to then take them through those tough periods. So it's all about that as well, and ensuring that being able to do well when times are good, but also preserving that amount, and then ensuring that that amount gets compounded over years. So ultimately, then you get to choose how long you want to, how many hours you want to do, being able to maybe even employ other people because you've got the funds to, and at the same time down the track maybe even retire earlier if that's what you choose to do as well. But ultimately, then giving you choice in life.
Hey, I hope you're enjoying the podcast. We're always trying to bring you information that's going to make your life as a builder much easier. So give us a thumbs up and make sure you hit the subscribe button so you don't miss the next episode.
Yeah. So just talk us through in your mind, like, you can imagine that a builder, and I speak to lots of them, are listening to this, and they're already busy. They already struggle to get home and have dinner with the family or see the kids or, all of that sort of stuff. And along comes Mick and Terry saying, here's a really good idea, and you've got to put another 20 hours a week or something into that. How can they find that time? And I know it's not 20 hours, it's nothing remotely close to that, but what, just to sort of manage people's expectations about what's possible and their commitment. And I know it's like, I'm not trying to ask this question so people can weigh it up, because like, apart from anything, I think you've got to have an interest and a passion, and a desire to educate yourself and be able to, read a bit of data and stuff like that, and turn it into somewhat of an enjoyable activity, not something you have to do. It's something that you do because you want to. Can you just sort of measure or manage the expectations of someone thinking, how would I fit this in? What am I expected to do?
Yeah, great question, Mick. And I think the first step though is that it wasn't invented by me. I think it was Simon Sinek who said this. It's that power of why. You need to find out your why, your big why first.
Yeah.
And that why is not about, getting to the share market and starting to invest. That's not the why. Ultimately, in the end, just like your business or what you do for trade, it's just a vehicle to get to that, the financial freedom that we call it, and to give you that choice down the track. So that why needs to be found out. It's all about, is it that you want to create something for the early retirement, or is it for your family? So if you've got that why, then you'll find that resource or the time that's required, the commitment that you need. And to manage expectations as well, there are two ways you can do it. One is whether for those who are super busy, and I mean, we deal with Aussie farmers. In fact, actually, now we've got over 700 Aussie farmers that have gone through our program, and we've trained them. And these farmers, they're actually super busy, especially during harvest time. But they've also found their why on why they do this as well. So it's the power of why, first of all. And just getting back to, there's two options. One is, in busy times, you can actually choose to be a what I call a passive investor, which literally can take you no more than, and say, about an hour a week, literally.
Wow.
So time-wise, that's the expectation. If you can't spend that 1 hour a week, then I guess
you're in trouble.
Either in trouble or go back to the why. Ask yourself, because this is the future that you want to create. And if you can't find that 1 hour to create the future you want, then you definitely need to speak to me in regards to business and get things sorted, because that's the first step. Yeah, because the business is the cash flow; it's the cash flow vehicle for the investment. So that's there. Then on the other side, there are times that you may not be as busy throughout the year, and you can then go more active. But even active doesn't mean that you're spending 10, 20 hours. It's literally about 20 to 30 minutes a day, 5 days a week. So it really doesn't amount to much. It's about 2 hours, 2.5 hours a week at the most. And that's been quite active. And when I say active, it's like every day on average. There may be days that there's no opportunities, because we go for low hanging fruit. If there's no low hanging fruit, i.e., in other words, there's no low risk opportunities, we just shut down the PC. There's nothing else to do. It's a 5-minute job or less than that. In other days, when there is opportunities, then you may spend that 20, 30 minutes a day. And I guess the question is, is it worthwhile? You bet it is, because just to give you a guide, over the last couple of years since we last spoke, Mick, for example, 2024, last year, our return, spending that, and I'm actually quite an active investor, so I do spend that 20, 30 minutes a day. Once it's systemized, that is, of course, it's a checklist-driven system where almost like tick sheet. in 2024, the return was almost 27%.
Wow.
It's 27%. What do you get? Where do you get that type of return? You can't get it in a bank, put in a term deposit. You'll be lucky to get 4.5%, 5%. And then the year before was 32%. And that was both those years was in fact I always because I'm very risk averse, so that was achieved with holding at all times 20 to 30% in cash. So I was only at most 75% invested to get that return. Could I have gotten more? Yes, but I was always cashed up, ready to go in case there was a downturn. I can then take advantage of even more opportunities. So that was that. And then in 2022, when the market actually plummeted by minus 20%. We only say only, but we only got 12%, but we still outperformed the market by 32%. So it's really all about, if you know your why and you know that this is the vehicle that's going to, along with your business, that is the two vehicles working together, knowing that it's going to. Oh, apologies, not sure why that's.
It's not me ringing you. I'm sitting here listening to you, so it's definitely not me.
Apologies. My phone is on flight mode, but I've got another number that's somehow on there. Just switch it off.
They'll always find a way.
Oh. Hold up.
I'll just pad here and maybe sing a
sing
song or.
No, I've got Just Call, Mick, and Just Call rings. Didn't even know that. I'm on flight mode.
There you go.
Yeah, that's not good.
Bit of an ad for Just Call.
Duh.
Not a sponsor of the program.
Power off. Yeah, okay, phone's off now. Just going back to that. Where was I? Yeah, so Mick, just going back to what I was saying is, if you've got a process that can generate quite a safe return that gives you double-digit compounding growth year after year, and if you combine that with running a well-run business with your help, those two vehicles alone will give you that financial freedom. So it is definitely worth that effort to put in. And unlike business, which does take a lot of hours, by siphoning off a couple, an hour, 2 hours a week, going along this side as well, it is the vehicle that will give that financial freedom in several years down the track.
So one of the things that I've learnt along the journey is that all of our decisions generally are made emotionally, and in your system, they're not. They're like, I guess they are, but when the data makes sense, you feel good and you take an action. But just unpack the importance of, I guess, in this space, not or having a system to help you make the decisions, because all decisions are based on emotion. Like even if you're, an actuary without a personality, you'll still make emotional decisions. But you'll see that spreadsheet or whatever, and when it makes sense to you, you'll feel good and you'll say yes. Profit first is an emotional decision making process. It doesn't affect your accounting, but it changes how you see your situation. Therefore, it changes how you feel about the situation. Therefore, it changes your decisions by default. Run us through how what you do affects emotions, or how you manage emotions through this process, because it's essential.
Yes, because I say that the best investors and traders on the planet, what my goal is, I want to train people to become almost robotic. So the emotional decision is right up front when you decide that this is the way you want to go. Your big powerful why. That's the emotional side.
Yeah.
How much you want to allocate, and I always still say, no matter how much I train someone, always start small, because that becomes still the emotional decision. But I would say that the amount that you starting off small also lowers the amount of emotion, because even if I give you a very systemized process, having a small account starting off with to prove to yourself that it works, then you'll then see or realize the potential of this process. And then now emotionally, what you can do, of course, and which you will do, is obviously add more funds to it and scale over time, adding more profits, etc. But how we try to get rid of the emotion is, firstly, the big one is not thinking about in the dollar sense. So when we buy and sell, we are actually always allocating percentages of the account, but also when we are making money as well, and also on the opposite spectrum, if we do lose money as well. And by the way, I don't get them all right. I want to make that clear. 80% of our investments make money, so 8 out of 10. So that's been our long-term record. Every 10 investments we make, 8 will make money, 2 will not make money, and we have to be okay with that. So I want us to always set the expectation that 2 to 3 out of 10 will be wrong or will not make money, despite the amount of research we do. It just won't make money, and we have to be okay with that. And the other part is that if you have this systemized process and only think about percentages, if you make money, let's say if you made, say, $1,000, and if you go, oh, I've just made $1,000, that triggers emotions, because you all of a sudden, we think about what $1,000 could make, could buy you, for example. It could mean a good interstate trip, for example, straight away. But whereas if you convert that and just go, okay, I actually just made 10% versus $1,000, that changes everything. Because over time, as your portfolio grows, the dollar-wise will definitely get bigger and bigger. And it's very important that you stay unemotional or sort of
detached,
I don't know
perhaps.
detached, actually. Yeah, detached of what amount of money you do make. Because if you've got $1 million account, some days when the account goes up by 10%, you basically made 100,000. But other days when you got the market overall might go down by 2 or 3%, and then technically on paper you've lost $20,000, and you don't want this emotional roller coaster. So going in percentages is one of the key factors, that's for sure. The other key factor too is that by thinking about percentages on every time you allocate capital, it's like, we are going very small. We tiptoe ourselves in. So generally, when we find an investment, no matter how good it is, depending on the market risk that's in the market at the moment, we will generally invest between only 0.5% to 1% of the overall account, which is actually very tiny. So therefore, that detaches even further, because every time you make a decision on buying something, it is so small of the account, it actually should be automatic that you don't have to think or you don't get emotional about it, because it makes no difference to your life. So that's the big thing from that point of view, I think. Yeah.
You want to think some more about it, or you
Yeah. I mean, that's the basis. And there's definitely more. The other part too is by following
I knew there was more. We just had to poke and prod.
By following a very systemized process. If you're like almost checklist driven, it's all about just ensuring that if you find an investment, it needs to tick all the boxes. And the truth is, if it doesn't tick the boxes you need, let it go. There's more than enough opportunities, because we are looking at not just the Australian market, we're looking at the global market, right? So there's enough companies out there or stocks out there that will tick the boxes. And sometimes when they're overpriced, we just don't we let them go. So if you utilize that systemized process to choose the investments, but also ensure that you don't overpay, then that also gets rid of the emotion as well. And I think that's the big part. So that's, I guess, part 3. And then the other big part too is having a systemized process to understand the world, as in, is the world now at this point in time safe to invest in or not? Because there are times where, and data will tell you this, there are times that you should stay out of the market, and there are tools, very clear, free government data tools, which show you that, is the world still okay? If the world's okay, continue doing what you're doing. But if the tools clearly show you that things are starting to break, then I always say, don't get greedy, start pulling back, and then getting back into the safety of cash, and potentially even sell down some of your investments to ensure that you are cashed up. And when the market downturn does happen, to be ready for that downturn, because I would say, if you are ready, they are the best opportunities, in fact, to get the highest return, but with the lowest risk as well, because you are literally buying assets on sale, and that's what we crave for, those type of opportunities. So we don't fear recessions and we don't fear market corrections. We actually prepare for them, and when they do come, believe me, there's a bit of emotion because I get excited. But then even beyond that excitement, you still want to follow that process to choose the right stocks or choose the right companies to buy into, but also allocate the right amount of capital based on all those the very strict rules as well.
Yeah. You mentioned, ticking all of the boxes to be able to select a stock, and this is a little bit off topic, but not. I'm just asking it because I'm interested in it, and I always found it fascinating that I think you might have used Uber or something as an example some time ago. That so many people think, it's such a huge, big company, and it's worth X amount of billions of dollars, and everywhere you look, there's an Uber and all of that sort of stuff. It's got to be a good, solid company to invest in. But I remember, I think you might have been using it as an example of why you wouldn't invest in it.
Yes.
And it was like at that stage, I don't think it had made any profit. Has it yet?
No, it finally did because of not Uber itself, but Uber Eats, and it's a very tiny profit though compared to the overall what people are paying for. So till this day, even though we've spoken a couple of times now, Mick, on let's say utilizing Uber as an example, back then it definitely did not make any profits. Now finally it's making a slither of profit, but it's still up and down. Some quarters it makes money, other quarters it loses money. So despite being such a dominant world company, it's still losing money and still hardly making any money. So while we go to Uber, when there's companies like, for example, the Microsofts, the Googles that are extremely profitable, and when the market actually drops and it pulls these stocks down, you actually want to be part of these type of companies because a stock ultimately then is a company, and what you are investing is not a stock, but it's actually a company that is just listed. So we always have to remember that it's a real business. It needs to be profitable, just like your business, and you need to also pay the right price because any company is really the price you pay for it is important because if you overpay for it, just like a house, say a house is worth $1 million, and if there's a mortgage sale and that it's worth $1 million because all the houses on the same street is worth $1 million at least, and this house is selling for 600,000 from a bank that just wants to get rid of it, it's on sale. But at an auction, if somebody gets emotionally, saying that I definitely want this house because it's good for my family, it's just down the road from my in-laws, and I definitely want it, and they end up paying say 1.5 for it at auction, they are not going to make. They'll eventually probably make money if they hold it long enough, but they are not going to make money if they want to sell it the next day. Yeah. So the stock market is no different.
Yeah. Black Belt is our community that I've built over the years, and I really understand deeply how important it is to belong to a community, to give you support, but to give you ideas as well, to challenge you, to improve your belief. But the big thing about community for me is it's like a peloton in a bike race, or it's like the way geese fly in a V formation. The science behind it is as that if you travel together in a group like that, you can go much further, faster, and use a lot less energy. And community is just, I think it's the most important thing. You've got a community. Tell us about your community, people thinking about, jumping onto your, getting the resource that you're talking about here today, and potentially, jumping in with you to get your guidance and support. Tell us about your community.
Yeah, I mean, this is my 10th year running this mentoring side on the share market after managing funds for so many years, and it has been quite surprising that it's grown to over 2,000 members now. And once they're a blueprinter, they're pretty much for life as a blueprinter. And we just guide them, as in there's obviously two levels. One is just the giving you the education piece and ensuring that you know what you're doing. And then there's the other part too is that I literally show you. I'm very transparent, so I literally show you what I'm literally buying or selling on a weekly and daily basis. So then, in effect, you are building your portfolio with me alongside with my guidance. So our community is just amazing because we somehow have attracted the right people. And the moment you come in, you are of course welcomed. But at the same time, when you ask a question, you don't only just get help from me and my team, but also you actually get help from so many veterans that have been with me for all these years, and they see your question and they jump in and they help you answer your question as well. So so it's just been an amazing community of like-minded individuals, all walks of life. Many builders and tradies in the community, and all, I guess, on the same path, on the same goal of creating that financial freedom for themselves, but in a way, a different path because everybody's on different circumstances financially. So all starting differently, but however, their main goal is not just to make money, which this program seems to be, but it's all about creating the lifestyle that you want to be. So a lot of our members actually not only post their wins in terms of their gains, but more importantly, they actually sometimes when they're on holidays, they actually post photos of themselves, or a lot of our students also sort of getting a four-wheel drive vehicle and driving literally around the country and camping all over the place. And with their Starlink, they just they even invest in trade inside a tent, and they actually take photos of that as well, which is amazing. And that's just inspiration of what you can do, because investing in trading is very different because you physically, as long as you've got internet access, wherever you are around the world, you can actually do this.
Yeah, perfect. And you also, I see all of the photos. You're out in Vietnamese restaurants without me, with a group of people in the Blueprint program and what have you. So there's a bit of face to face from time to time.
Yes.
And if it's anything like my community in Black Belt, people create connections and deep friendships and help each other out and communicate outside the normal get-togethers and what have you. So I think community's just really, really cool. Final question: the resource you were talking about, the 25 pager. What's the process? How do we get hold of it? What's the story?
Not easy, Mick. I'll pass that over to you, and pretty much hopefully there should be a link that you can create, and then just no opt-in required. Just download it and use it.
Well, that's easy. So we'll put that link in the description. If I'm pointing up there, the description could be down here very well. I don't know where it'll be, depending on which platform you're watching this in. But we'll make sure we add the link there. We'll put the website link in there as well, just so they've got additional information to be able to go and sort out. So that's wonderful. Yeah. It's terrific stuff, and it just makes so much sense. If you are in a building business, I talked to quite a few builders, and quite often their idea of when they start to make some profit, they have this brilliant idea of starting to buy a property and do it up, or buy land and do a home on spec or something like that. And dude, that is just so fraught with danger. I've seen so many builders lose money doing that. You can make money doing it, but it's a specialist activity. It's like, just because you build houses for a customer doesn't mean you can turn that into a profitable business for yourself. A lot of builders are confident in doing that. But you've also got to have a lot of access to capital to be able to do that sort of stuff as well. What you're talking about is, you can start with small amounts, and you can be introducing additional small amounts over time, and there's not that much at risk in the beginning, but you're learning, and as you get better and more confident, your portfolio will be expanding. And away you go. So, and Mick, it sounds like a great option.
Yeah, and Mick, I would say that it's actually, I would say even zero risk, because the companies, even with whether you start with $5,000, $10,000, $20,000, the companies we buy, they are global world-class companies.
Yeah.
And to really lose that, what it means is that all those companies that you've created in that small portfolio, they've all gone bankrupt like within the same day. They won't. Yeah. So I can guarantee that it just won't happen. So because they tick all the boxes, the chance of them going bust, actually, I've never had a company, in fact, ever gone bust on me, because I follow the process.
Yeah.
Back in the old days when I didn't have this process, yes, I did. I bought into spec companies. But these days, with what we do, we avoid those type of companies, and we just go on the big end of town, usually the Fortune 500 or the ASX 100, and they're the companies that we want to be in, because one, they won't go bust, but two, they're also very profitable as well.
Yeah. Makes a whole lot of sense to me. Mate, thank you very much for coming back on the show and sharing this new idea with us and giving people the opportunity to jump in and have a look at it. So been an absolute pleasure to catch up with you again. Appreciate you putting the time aside to come and share with us. And I'm sure we'll be talking to you again at some stage.
No worries, Mick. Yeah, a pleasure to be here, and and thanks for having me.
Great stuff. Thank you, Terry. So some food for thought, and it might be something that you thought, that I'm not into that sort of stuff. I would suggest that you click the link in the description anyway and just take a look at it, because it just makes so much sense to me to have that sort of second string to your bow, starting off small, starting to educate yourself on a different way to bring in an arm of income into the income octopus. Like if you've got all your eggs in just your building business or what have you, and you live and die based on the success of that, if you've got something else that's generating some income, there's no reason in the wide world why that couldn't even be your primary source of income at some stage in the future if you commit to learning it and contribute to it. So I'd take a look at it for sure. And you can jump on Terry's website. We'll put the link in the description for that as well. If you've got absolutely nothing to do after you finish listening to the podcast, make sure you do the Build 'em Freedom Readiness Scorecard. It'll take you about 2 minutes. You'll get some really cool stuff in the inbox pretty much straight away, a minute or two afterwards. That will be very useful to you. And we'll be back with another episode of the ToolShed Podcast before you know it. I'm Mick Hawes from Builder's Business Black Belt. That is all. I'm out. Bye for now.
You've been listening to the ToolShed. If this podcast struck a chord with you, make sure you spread the word by sharing it with your mates in the building industry. We love your help to make the building industry better for everyone involved.